Hello, welcome back to another session in the HR Basics training series. In this video, we will make you familiar with the terminology used in an HR organization. Did you watch our video on role of an HR organization in this series? If not, we recommend you watch it before this video. This training video is also intended for newbies who never worked in the HR team. If you are already familiar with HR functions and terminology, you may skip this video. Worker types. Workers are mainly grouped into two categories, employees and contingent workers. Employees are further classified into subcategories. Seasonal employees. Companies hire seasonal employees to help them out during increased work demands. For example, workers hired during holiday seasons at stores. Fixed-term employees or temporary employees. Companies hire temporary employees for a limited period or a specific task or project. Interns. An intern is a student or trainee who works at a company to gain work experience. Other employees fall into the permanent or regular employees bucket. These employees don't have a specific end date to employment. Contingent workers. Companies do not directly employ contingent workers. Companies usually hire them through an agency to perform specific services for a limited period. Companies pay the agency through invoices, and the agency pays the contingent workers. Contingent workers are not entitled to time off and benefits. Contingent workers are further classified into subcategories. Contractors are hired through an agency to perform a specific task or job. Consultants are hired through an agency to provide expert advice or guidance. Independent contractors/consultants, hired directly by companies, not through agency. Companies pay them on 1099, not on W-2. Full-time versus part-time status. Depending on the scheduled work hours, workers further grouped into full-time or part-time status. Employees who typically work a 30 to 40-hour week are considered full-time. Employees who work fewer than 30 hours a week are considered part-time. The Fair Labor Standards Act doesn't define full or part-time employees, leaving employers to come up with their own definition. Companies may offer different benefit packages depending on their full-time or part-time status. Exempt versus non-exempt status. In the U.S., the Fair Labor Standards Act enforces employers to classify their employees into exempt and non-exempt status depending on their job duties. Exempt employees are not entitled to overtime pay. Non-exempt employees must be paid overtime and are protected by FLSA regulations. Organization. An organization groups resources, workers, and costs to support a particular business function. For example, business unit, department, cost center. Work location is an office location where an employee works typically. Remote worker. A remote worker is someone who is employed by a company but works outside of a traditional office environment. Usually, these employees work from home. Job profile describes characteristics of a job, including competencies, skills, experience, education, training, and other qualifications required to perform the job. Pay grade defines the level and the pay range for a job. Comp market or comp region. Employees' pay varies depending on the work location. The compensation team groups the states and cities in comp markets and defines pay scales based on the comp market. Business process. A business process is a set of activities or tasks to accomplish a business goal. For example, hiring an employee is a business process. Here are the steps in hiring an employee. HR creates and posts a job. Candidates apply to the job posting. Recruiters review the job applications. Hiring manager interviews candidates. HR team extends the offer to the selected candidate. The candidate accepts the offer. HR team onboards employee. Dashboards. Dashboards organize and display important information from multiple sources into one. Integrations. Integrations are used to connect various systems, mainly to feed data from one system to another. Worker ID, a unique identifier assigned to a worker. Legal name, name that identifies a person for legal, administrative, and other official purposes. Preferred name, preferred names are chosen names or nicknames. Some workers would like to be called with a different name than a legal name. For example, Jennifer may be known as Jen in the company. Jennifer is the legal name, and Jen is the preferred name. Personal information, companies collect workers' personal information that includes legal name, preferred name, date of birth, gender, ethnicity, race, nationality, etc. Home contact information includes workers' home address, home phone numbers, and personal email. Work contact information includes workers' email addresses and desk contact numbers. Worker status, active or inactive. Active workers are who are currently with the company. Inactive workers are those who resigned or terminated from the company. Reporting manager, workers report to a manager. A manager is in charge of a department and the people who work in it. Dependents, dependents are qualifying children of an employee. Employees may cover qualifying dependents in the benefit plans. Beneficiaries, a beneficiary is a person who receives benefits from a particular entity or a person. Employees add beneficiaries to the life insurance plan. Salary, a fixed, regular payment, typically paid monthly or bi-weekly to employees for performing the job. Allowances, an allowance is a money given to someone regularly or as part of their compensation package. In some countries like India, the total salary includes base pay, house rent allowance, internet allowance, medical allowance, etc. Bonus, an amount of money paid to employees, especially as a reward for good performance. Pay mix, for sales employees, their total compensation includes base pay plus sales commission. It is called pay mix. For example, pay mix 70/30 means 70% paid as base pay and 30% paid as sales commission. Sales commissions, a sales commission is the amount of compensation paid to a person based on the amount of sales generated. Restricted stock units or RSUs, restricted stock units are a form of stock-based employee compensation, which vests over a period of time. Companies usually grant new hires with new hire stock grants and grant additional stock during their tenure as a reward for performance. People manager, people managers are the leaders who manage team members, make hiring and firing decisions, and provide management with information about the individual employee. Internal career site. This is a career page where the company posts job openings for internal employees to apply. Employees can use the internal career site to search for job opportunities within the organization. External career site. This is a career page where the company posts job openings for external candidates to apply. Prospect. Potential candidates who have skills and qualifications to apply for current or future job openings. Candidate, also known as job applicant. It is a person who is interested in applied to a job opening. Job application. A job application is a form that employers ask job applicants to fill out to learn about their education, experience, and work history. Position. A position is a placeholder to hire a worker in the company. It describes the job title, role, responsibilities, and pay for a worker to be hired. Finance approves the budget for the position. Position status will be open until you employ the worker. Once you hire the worker, position status will be changed to filled. Job requisition, a request from the hiring manager to hire workers into a vacant position. Job posting, these are job openings in the company that are posted to internal and external career sites. Candidate stages, when a candidate applies to a job opening, they go through different stages in the process. These stages include review, phone interview, in-person interview, background check, reference check, offer, ready for hire, onboard, etc. Hiring manager is the one who is hiring for an open position on their team. Offer or employment agreement. It is a written form that informs a candidate that they have been selected for employment. It's a formal letter that often includes employment details, start date, benefits, and most importantly, the terms of employment. Company policies. Company policies are rules that govern a company's code of conduct. They apply to both employees and employers, and they may govern conduct both within and outside the workplace. New hire orientation. It is the process of introducing newly hired employees to their new workplace. It provides the basic organizational information employees need to feel prepared for their new team, department, and role within the company. Internal hire. Employees can apply for other job openings in the company. If an existing employee is selected for another role in the company, it is called internal hire. External hire is a candidate from outside the company hired into a job. Rehire is a person who was worked with the company in the past and hired into a job again. Contractor to employee conversion. Companies offer contractors to convert to regular employees. It is called contractor conversion. Intern to employee conversion. Companies offer permanent jobs for interns. It is called internal to employee conversion. Start date is the joining date of a worker. Performance reviews. A performance review is a formal assessment in which a manager evaluates an employee's work performance, identifies strengths and weaknesses, offers feedback, and sets goals for future performance. Managers also collect feedback from the customers and colleagues about the workers during the process. Calibration. Calibration is a process in which managers come together to discuss the performance of employees and achieve agreement on performance and potential ratings. Disciplinary actions. A disciplinary action is a reprimand or corrective action in response to employee misconduct, rule violation, or poor performance. Depending on the severity of the case, disciplinary action can take different forms, including a verbal warning, written warning, performance improvement plan, reduction in job duties and pay, or termination of employment. Performance Improvement Plan, also known as PIP. It is a plan that is given to employees with performance deficiencies an opportunity to succeed. Development Plans. A development plan documents the goals, required skills, and competencies to support continuous improvement and career development. Merit Planning, also known as pay for performance, is a process to raise employees' pay based on a set of criteria set by the employer. It usually involves the employer conducting employee performance reviews and increases the pay based on their performance. Bonus Payouts. It is a process of calculating employees' variable pay using individual and company performance modifiers. Total Reward Statements. Total reward statements are used by employers to demonstrate to employees the actual value of all their entire pay and reward package, which may comprise basic pay, overtime, bonuses, pension contributions, health benefits, and more. One-time payments. Companies offer one-time payments like spot bonus, sign-on bonus, referral bonus to their employees. Paid time off. Paid time off is an employer-provided benefit that grants employees personal time off, vacation days, federal holidays, sick leave, and maternity and paternity leave. Jury duty. Employers provide paid time off for employees when they are called on a jury duty. Bereavement. Employers provide paid time off, which is available to an employee at the time of death or funeral of a member of the employee's immediate family. Time off accrual. Accrued time off is PTO that workers earn over a period. For example, if an employee is eligible for 12 days of PTO in a year, the employer credits 1 day per month to their time off balance. Time off balance, remaining balance after taking time off from the accrued balance. Holiday calendar. Employers provide paid holidays to employees. These are listed on the employee's absence calendar. Work schedule. A work schedule refers to the specific days and hours designated to an employee for paid work, mainly used to capture the schedules of shift workers. Benefits plans. Employees may be eligible for different benefit plans, including medical, dental, vision, life insurance, and disability plans. 401k plans. Employers also provide an opportunity for employees to enroll in retirement plans like 401k. Some employers match their contributions to these plans as well. Open enrollment, a period of time designated by the employer's health or other benefit plans. Employees may enroll in new benefit plans or change existing benefit plans for the upcoming year. Qualifying event. A qualifying event is a change in life circumstances that allows you to alter an existing health and insurance policy or sign up for a new one outside of open enrollment periods. For example, new hire, birth, adoption, marriage, termination of employment, etc. Internal transfers, transfer of workers from one organization to another. For example, transfer of an employee to another manager or another cost center. Usually, these transfers are done within the same country. International transfers, transfer of workers from one country to another. These could be permanent transfers or temporarily for a period of time. Expat, also known as an expatriate. A U.S. employee who is on assignment to another country. Inpat, a non-U.S. employee who is on assignment to the U.S. Promotions is a process of moving employees to the next level after exhibiting job skills and the experience required for the next level job. Demotions, it is a process of reducing the job duties of underperforming employees. Voluntary termination, process of terminating employment when an employee submits a written or verbal notice of resignation or intent to retire. Involuntary termination, process of terminating employment when a job is eliminated or when an employee is fired due to performance or conduct reasons. Exit interview, an interview held with an employee about to leave an organization, typically to discuss the employee's reasons for leaving and their experience of working for the organization. Access provisioning, it is the process of granting access to employees who newly joined the organization or promoted to another job level. Access to provisioning, it is the process of removing access for employees leaving the organization. Pay group, grouping of workers for processing payroll. They are usually grouped based on employee characteristics, pay frequency, country location, etc. Payslip, a note or document was given to employees when they are paid, detailing earnings, pre-tax, post-tax deductions, and net pay. Direct deposit, employees provide their bank account details to receive their pay. The payroll team sends electronic transfer of a payment directly to employees' bank accounts. Garnishments, garnishment is a legal process for collecting a monetary judgment on behalf of a plaintiff from a defendant. For example, child support, spousal support, tax alimonies, etc. Timesheets, non-exempt employees must record their work time and submit it to payroll for payment. The payroll team calculates the regular and overtime from the timesheets and pays the employees accordingly. Payroll accounting is the process of recording payroll expenses into a general ledger. General ledger is the bookkeeping of all financial transactions, including payroll expenses in the company. Once again, thanks for joining us today. If you have any further questions, please visit our website hcmarmy.com. Also, you may reach us at 512-481-2747 or send us an email at contactus@hcmarmy.com. For more training videos, please follow us on LinkedIn and subscribe to our YouTube channel.